Hello everyone, and welcome to a nice afternoon where we're going to talk trading. It's about 12:59. Let's give a few more minutes just for some last minute people to walk in the door. All right, I'm going to show you just real quick. This was some day trading stuff. There was a big signal here, while everyone in the US was asleep, to go short. And then, my gosh, what a run all the way down here. Isn't that amazing? Now, by the time we got the signal and launched a trade on this, and then it finally, we took one off here and then took another off here. That's, believe it or not, $875. We took this in simulation. Okay, I just want you to know that. We took this in simulation, but incredible. Just absolutely incredible. Very, very, very slow day today. Very slow day today. All right, I'm going to go ahead and get my presentation materials up here. Okay, good. So why don't we just give about, it's 1 o'clock now. Maybe one more minute and I'll get started. While you're waiting, we're going to have the format where I make a presentation. I get really involved with what I'm talking about, so I'm going to ask you to hold your questions to the end, and then I'll take all the questions that you have. All right? No problem. No problem. If anyone is having any sound issues, it might be good to leave the room and then come back into the room. This is a pretty robust platform we're using. Okay, it's about that time, 1:01. Let's get started. Okay, we're going to talk today about trading, position trading with trend and momentum. My name is Martin Rimes. I want to thank all the guys, not just Gilbert, over at Agina Trader. Your commitment to trader education is greatly appreciated. I'd like to remind you we are all adults here. Trading financial instruments using contracts, stocks, or options is extremely risky. Only trade with money you can afford to lose or place at risk. Past results do not guarantee future results. Please consult a licensed professional prior to trading using any real money. Above all, paper trade to learn any new concepts, and paper trade regardless of your level of expertise. Now, the way this works is I'm going to tell you a little bit about me, very, very briefly. I'm going to spend maybe 45 seconds on what I do, and then it's going to be an educational presentation. That's the way I work. I'd like you to know that I approach these webinars enjoying to talk to traders about trading. Okay, that's a big deal with me. It's a form of giving back because there was people that helped me when I was first starting. So what you're going to learn today is an immediate system you can test on your own and see if it speaks to you. I think we should recognize the fact that 80% of the people who are here probably will not be here in a year or 6 months even. 20% will work extremely hard, working their craft with dedicated effort. And I'm reaching out to everyone, but especially those 20%, the survivors, who are committed to this livelihood. If trading were easy, everyone would do it. Brokers would do it, everyone, but it is a very challenging task. I've been trading for 25 plus years, off and on. Started first in high school. Someone gave me some stock, sold it to go on a ski trip. The last 10 years trading, both day trading and position trading primarily with options with stocks and testing systems. I've spoken at various trading conferences. I've spoken for the CME. I've spoken for ICE and have provided numerous webinars for traders promoting what I believe is a relaxed, simplified trading methodology for futures, stocks, and options. I launched in 2008, Hit the Mark Trading, and then my boot camps. In 2015, I created a new course strictly for day traders called Just Day Trade. I do live webinar training 4 times a year for boot camps. That's for position trading, a little bit of talk on day trading. And 4 times a year I will do Just Day Trade, which is intense immersion, strictly day trading only. Each class has 6+ hours of instruction. They are recorded and available. It's just like sitting in a real-time environment if you are interested in the recordings. You can go to hitthemarktrading.com for detail. Now this is me. This is who's speaking to you. This is my that's a window outside of my trading room. Here's my trading room. This is the trading room at the house. And then I also have an office that I go to. Okay? Everyone needs a dedicated space for their trading. The Hit the Mark Trading newsletter is a nightly newsletter designed to teach you how to trade. I believe you should become your own expert. I call trades and you watch them unfolding. You practice on paper risk-free. That's the only way to take ownership of the process. Okay? Repetition is what I'm all about. I'll tell you right now, if you want to sign up for Rooster Call, I write something every morning, trading morning. This is free for 30 days. No credit card required. It's my opinion. That means it might be sometimes very cynical, sometimes just matter of fact, but it's good information. This is Rooster Call. Go to hitthemarktrading.com. You can find on the website information about the boot camp and the Just Day Trade. But for now, let's move on to our feature presentation. Let's get started. Now, what is momentum trading? Momentum trading is the art of spotting a market ready to move, selecting a trade, entering the trade with confidence, and utilizing predetermined exit points. Momentum trading builds off a firm understanding of support and resistance along with known areas price is attracted toward moving. So, momentum trading is trading directionally up or down, riding the price wave rather than reacting to what might happen. And this is usually accompanied by a price oscillator. We use this for intraday or trading that will hold over a few days or weeks. Today I'm going to talk about position trading. So we want to determine the trend. Someone once said, right? The trend is your friend. We're going to look at the weekly chart for the big picture, and we're going to use the daily chart for tactical entries. Once a month, we will take a look at the monthly chart just to give us a very broad, large picture of the market or our instrument, if you would like. So we know that markets move in 3 directions, up, down, and sideways. If the market is sideways, we are greatly challenged unless the range is large. So it is imperative to find moving markets. This is the weekly FXY, a yen ETF. And all I'm showing you here is downtrend, sideways market, and uptrend. Looks to me like that uptrend could be breaking, doesn't it? This was just, I snapped this yesterday. Notice that I purposely have not shown you any indicator. This is all about looking at the chart, observing trend. To identify trend, we can bracket price with trend lines, a weekly chart, a daily chart, and we understand this extremely high technical analysis concept that says price will bang back and forth between the trend lines. Now look, if you're an engineering type, if you are a airline pilot, or if you are a doctor and you're used to precision and exactness, I'll tell you right now, we are visual traders. We are visual traders, okay? We look at the action on the chart rather than looking at, for example, the market makers. They're only interested in numbers. They trade with numbers only. Well, we are visual traders. So if I see I'm in an uptrend, I already know any trade to go long has an advantage, don't I? If I'm in a downtrend, I already know any trade that I take short likely has an advantage. If I draw the lines, I simply draw the roadmap, don't I? So I'm going to just draw a line right here. I would have probably had something like this on here before I extended that line out, you know, something like that, right? This is all meaningful. And look how price came back up to test it. So yes, we do these. We draw the trend lines. Crazy about trend lines, actually. So this is IBB. This is a biotech exchange traded fund. Why do I choose IBB? Well, because I know that IBB is a mover. It has momentum. If I'm going to be trading with any methodology that relies on trend and momentum, I must have an instrument that is known to pick up and go, right? Pick up and go. So you can see the, let me get my pointer, spotlight. 1, 2, 3. All right, for some reason, price does not want to go before this line, below this line. Therefore, if we start moving down, pretty safe bet where it wants to go, and I should be ready for price to kick back higher. Beyond that, as long as we're up here and this line at the top is holding, I will always keep that line in mind. Start drawing down here when I can connect some of these candle action. And boom, we test, we come up, we come back down. It slipped out, but whoop, not too long. Slip right back up in a matter of days. Very strong movement. Once we start going, look, there's a little signal to go long here according to this. This is something that I've, whoops, sorry. This is something that the people at Agina have looked at my system and have coded for me. Once we start moving, it's time to get ready to rumble, and boom, up we go. Now you got to appreciate that we are talking about an instrument that can easily move $5 a day, up or down. All I got to do is get the direction right, right? Good. I tell you, people that aren't used to my style of trading are going to be wondering, scratching their head, well, he's not using volume. Well, he's not using this or that. Understand that in trading, support and resistance is absolutely huge, and especially in momentum trading. So learn to identify probable areas price wants to touch over and over again. Now, when we talk about the use of an oscillator, it is very important that you realize and appreciate that oscillators derive their power from price movement. So for this reason, you really need to understand how to read the price action at support and resistance areas. The oscillator then provides a trigger point for entry. This is what most traders look like when they're trying to figure out which oscillator to use, and then people get really, really confident about what they have and what they're working with and how it can describe the market action. Do you remember the story about the 6 blind men who Each one went to a different part of an elephant, and just by feeling one part, they're trying to tell you what that whole thing is that they're feeling, right? So with these traders, maybe the guy in the front says, oh, this MACD tells me everything I need to know. Maybe the next guy says, well, this RSI, I know exactly what I've got here. RSI is the only thing I want to use. This one says it feels like %R is what speaks to me. Maybe there's Bollinger Bands. Then you've got the expensive proprietary indicators, right? Or maybe slow stochastic, just one of the old war horses. My point with you, find what speaks to you. Now, tons of oscillators exist, and everyone has their personal favorite. In the beginning years, I used slow stochastics, MACD, Williams %R, and RSI. I probably had the Bollinger Bands on there too. But at present, and through many, many years of testing, I use one indicator just because I want to simplify. So I use the Commodity Channel Index, also called the CCI. And if you heard my presentation on day trading, it's the same instrument. This is what no one will tell you. And I want to tell you that in a strong momentum market, all price oscillators work. Everything works. You name it, it will work. You want a moving average cross? Pick any number. It's going to work in a moving market. In a tight range market, all price oscillators lose their predictive value, and I mean all of them. So this is one more reason to monitor several markets looking for momentum. Now, you can keep your charts as complicated as you want. I'm not here to change if that's what speaks to you. But so many times, if we clean up the charts, we can actually see what is going on a little bit better. Now, what is the CCI? The Commodity Channel Index is a price oscillator created by Mr. Donald Lambert. I've met Mr. Lambert. In a moving market, the CCI is shown to lead price. Now, don't take my word. That's a big statement there, okay? Let's be honest. In a moving market, the CCI is shown to lead price. Really? Well, if you check out John Murphy's take on this, in his book, Technical Analysis of the Financial Markets, then you have an unbiased view, an unbiased opinion. And by the way, Mr. Murphy's book is required reading for anyone who desires to become a chartered market technician. And all I want to do is draw your attention to this sentence. He only spends maybe half a page talking about this. Notice that the CCI turns before prices, hello, at each top and bottom. The default length is 20 days. That means in your package, your charting package, 20 days is the default. It's all automatically set. So what is he talking about? Well, this is the CCI, okay? It's in a histogram format. And notice that the CCI starts going down. What happened to price? You're getting that warning, hey, I'm ready to go down. Price starts going down. Coming up, price goes up. Coming down, price goes down. Coming up, price goes up. We believe that it leads price by one price bar. Okay? By one price bar. Is that important, one price bar? I think so. I think it gets you prepared. And the more you test it, and believe you me, I took 1 year to test this every single day. And the more you test this, and the more you see that it does work, then suddenly, what else do you need? The CCI is a price oscillator. All you need to know is that we're comparing price with a simple moving average over a selected time span. Mr. Lambert suggested a 20-day period. How do you calculate this? Well, you don't worry about it. The software platforms have this totally automated. You define the period. Here's a calculation. You can study this on your own time. I'm going to give you about 2 seconds to look at that. If you're really interested, you can look at the recording, freeze the frame, and study. Here's what I think you need to know as a visual trader. I'm going to show you a chart. The CCI is plotted on a histogram. The zero line in that histogram represents major support and resistance. The 100 line and 150 line represent minor support and resistance. So here we go. IBB. We see, drawing the lines, hey, we're in an uptrend. Now, look down at the indicator. I've made the indicator pretty big this time. Let me get my, okay. Where I've got this red ball here, this is the zero line. This is major support and resistance. This is zero line. I have minor support and resistance at the 100 or the minus 100. I've got minor support resistance at the 150 or minus 150. We are in what's considered extremes, an extreme reading, at 200 or minus 200, right? Anything greater than that, it's all extremes. Now, let's look closer at this histogram. And by the way, I gave this histogram to Agina Trader for them to incorporate, and they've done a marvelous job. So what we have here is, if I can get my pen, notice the yellow line. The yellow line is telling us that the CCI gives us a bias over the line. We're looking for up. Below the line, it's a downward bias. So that's what the yellow line is. Okay? That's what the yellow line is. When you get that past that 5 barbs, we're going to print all one color. This just gives you a visual. Hey, we're in an uptrend. We're in an uptrend. Or red. Hey, we're in a downtrend. We're in a downtrend. Okay? Now, if you're going to trade this, what do? You get a signal to go long. What do? Well, you're going to either buy the stock, the ETF. That's simple. A lot of money. Or you're going to say, if this is going to rise, then I know I can sell puts in a spread. Or, if that sounds too complicated, you can just buy the calls. Or if you get a really bullish signal, you sell the puts. You take the credit from selling the puts, and it helps subsidize your purchase of the calls. Wow, fancy. Short signals, if you get a short signal, you just do the reverse. You sell the calls. You buy the puts. All, better than, cheaper than tying up all that money into a stock that cost $250 to $310. But let's get back to these lines. And I've drawn these lines on the indicator. This is a diagonal trend line. And so what this tells me is, if I break the diagonal trend line, I'm looking for price, in this case, for price to fall, right? Over here, I've drawn it here. Extend it out. If I break it, I'm looking for what? I'm looking for price to rise, right? If I've had a line like this, which I just drew for you, I'm looking for what? I'm looking for price to fall. Oh my goodness. Price fell. Imagine that. If I've got a diagonal trend line break here, I'm looking for price to rise. Hello. Absolutely. Tell me how difficult or how much do you really enjoy a complicated trading system? I don't. This is about as simple as you can get. What's the key? Momentum, movement, that's the key. That's the key in anything you trade using this methodology. If you're not moving, then you are as if you're in a boat in the middle of the lake and you've got no oar, no paddle. So the top pattern for profit, I'd say this is about in 50% of the trades we use. We're looking for that diagonal trend line break. There's about 4 other patterns that I will use and teach, but this is a great start for you. This information allows for immediate testing, okay? Yes, you can trade in a very simplified manner. Here's the key point to remember. Start drawing the diagonal trend line starting at plus or minus 150. Your better trades are in markets showing momentum, moving instruments. Is the DAX a moving instrument? Absolutely. Lately it's been kind of tight. Stoxx 50. Well, Stoxx 50 will do whatever the DAX says. You know that. So let's talk about entry rules, specific entry rules. And I'm talking trader to trader now about trading. This is the only thing on my mind right now is trading. You're going to draw your diagonal trend line break with the trend. Now this is important, with the trend, right? Because you're just learning something. Counter trend only after you have mastered trend trading. Draw your line from plus or minus 150. Use a confirmation price bar close unless the trend is super strong. What's price bar confirmation? It means you get the signal. If you want to, look for one more price bar in your direction. Now, this is all something so simple that you can test on your own, okay? No two people trade exactly alike. And by the way, I always say entries are easy and exits are the most difficult. Now for protective stop, you want to try to be mechanical. For a long, you're going to place your stop below the trigger price bar or the prior price bar to that trigger, whoever is lower. Now I'll show you this on a chart. For a short, you're going to place that stop above the trigger price bar or the prior price bar if whoever is higher, if that prior price bar is higher, yes. Now this is a busy chart, so just bear with me, bear with me. I'm going to try to follow this over to the right. We have diagonal trend line break. Okay, it coincides with the program signal. That's natural. You're supposed to do that. So this is your trigger. Your protective stop goes right here, right? Just above the prior bar. That's it. Ring the register because you're making the money, right? Now, if a person knows how to sell calls, you're going to see some pretty good gains if you sell from, I don't know, 260 it looks like this is, and then, you get out down here around the 250, 245 area. You're going to make a lot more money than those people who are trying to sell out of the money calls. That are way out of the money. People trying to make scant percent. All right, you get another signal here, diagonal trendline break. So your stop goes just above there. Now suddenly we turn, okay? We turn up. So we're moving up. Here's our signal, by the way. And there's other things that triggered this. I just don't have the time today to go through everything. Now we got diagonal trendline break. So we're on alert here. Hey, this thing could move down. So we get the signal. We go in the next day and we're watching it. Well, what happened? We don't just automatically enter the order. Market opens and it starts moving back up. Well, it depends on where you sold your call or if you even got into the trade. We come back up, not to worry, diagonal trendline break. Here is the trigger, so your stop is there, or I don't care if you put it just above here, which is exactly, by the way, the call that you want to sell, and the put that you want to buy is probably just below this. Now our software package is a little more conservative, so this is where he got in. But the diagonal trendline break actually got you in earlier. Diagonal trendline break here. So the trigger is this bar, lower is just before it, and up we go. Now what the program did was said, I want to wait until we get out of this congestion. That's what the program said. But if you're just testing this, you don't need to worry about what this program does. I'm telling you, this is robust. Diagonal trendline break. Okay, here we got a sell signal right here. Put the protective stop just up here. This is initial, right? Initial. Now, sell the calls, buy the puts. Sell the stock short if that's what you like to do. Diagonal trendline break, going up. My gosh, it called the bottom. Do you believe that? Initial stop there. Obviously, in a fast market, you can certainly quickly move your stop up if you desire. Once you cross back over here, you know what's going to happen. You should, if you study the price action. Another signal, go long. Well, that coincides with our guy right here. Look at how this one gave us a little bit of a concern here. But the diagonal trendline break said we're going. Diagonal trendline break says we're moving up. Price does nothing. It's consolidating, and another signal says go. Well, it looked like we gapped up and went higher. I could go on and on and on and on, but I think you understand the methodology. Very simple. Let's go on. Now, exit rules, this is a very, very personal issue here because people have psychological attachments to money. Some people throw caution to the wind. Some people have extremely large trading account and can take larger protective stops and look for longer, larger gains, willing to endure pullback. Other people are trying to trade on a dime. Other people, no matter how much money they have, they get really nervous if they, you know, if they've already see $100 they've made and they get nervous. Well, should I take it or not? Should I let it run? Gee, I'm up $1,000. Should I get out, or will it go to 5? You know, everybody's different. I can't teach this. I can show you, but this is you in the mirror. So profit targets are easy. You just decide, hey, I'm happy if I make X amount. If you're going to use the indicator, well, If the CCI starts turning at the 150 line, crossing back towards zero, this is your first announcement. This is like the first bugle call. Momentum might be leaving the party. Hello? Now, if the CCI crosses the 100 line, you need to get out. You need to be out. What else? Well, you saw the magic of these channel trend lines, right? So obviously, if you're in an uptrend and price touches that channel line, you probably ought to be thinking about getting out of the trade. We have a strong belief the line holds until it doesn't. Now, trailing stops are an excellent choice. This is so nice if you can get yourself to use it and abide by it. It really takes the management off of you. It's what you program, but still the computer's doing it, and that's one of the things about the Agina Trader software I really love. It takes a strategy and suddenly you become a semi-automated trading strategy by having you put the order in there according to the strategy. It pops up an order according to what you set, your parameters. And if you decide, yeah, it looks good, I'll take the trade. Then the trailing stop tells you, well, you better get out now, or you better hold on because I'm not ready to leave this party. Entries are easy, exits are tough. What the experienced trader finds out is that the more time spent on exits, this is where the money is made, in my opinion. If you recognize you're a distractive type personality, then you need to probably use close exits. Or if you got visitors or people coming in and out, or what happens, you know, anything that can happen. If you're easily distracted, you probably should do tight stops or tight profit targets. But again, the trailing stop is wonderful. I'm going to show you one. I'll show you one after this slide. Okay. So I know it's a busy chart. Bear with me. I'm going to work through this with you. What I want you to see is that, let's say you got long on this diagonal trendline break right here, okay? Let's say you're long. Do you see the CCI crosses the 150 right here? And guess what? Look at price. Hello? I'm telling you, upward momentum might be leaving the party. So this is like your first bugle blast. And then when the 50 crosses the 100, which is right here, well, that happened to also signal a short. You want to be out of that long. This is just an example. Okay? Now, a problem with the CCI is that if it gets you in the trade early, it might also get you out of the trade early. So obviously you've got to work with this. You've got to understand the nuances. Maybe you want to apply a filter. We use a filter on it. Now I want to show you this Rhymes trailing stop. What I did was, you know, Gilbert, the owner of Agina Trader, saw my trading methodology, said, hey, we've got to program this. It's great. And then I told him about the trailing stop and gave him the parameters. And this is absolutely incredible. It really is. So let's just go through this. If we get long down here, anywhere, either the first guy getting in around this area or taking the signal here, which coincides with a diagonal trendline break, okay? Notice, your stop is the blue line. And you're not going to be taken out of the trade until price closes on the other side of that line. So here's where you got taken out. Got it? So the question is, as you have entered the trade at 260, and then all of a sudden you find, oh my gosh, this thing's already 270. And then you say to yourself, my goodness, 280. Should I get out? And then you see it go to 285. And then you are really, really nervous about losing your profit. The trailing stop is a wonderful tool. Let's be adults here, and let's say no one will ever call an exact top or an exact bottom, even though, hello, the channel line did in this case, but no one's going to call the exact bottom or the exact top. What the trailing stop does, this one that we're using, is it simply captures more of the gain before price can go against you. That's all it does. Obviously, there will be times when the trailing stop takes you out, and then maybe it goes merrily higher. Okay? Nothing in trading is 100%. We know this. We know this. But I think this is great. Now, we use this on the ES today in some day trading. I was showing this on the ES. It was such a very, very, very slow trading market. Incredibly, that trailing stop kept us in the trade. Really, it was just incredible. Like $875 trade. Just incredible. Now, that particular trade was in simulation because the market had no momentum. So it's like, okay, the program says we should do this. Let's watch this. Okay? All right. Let me move on now. Today I've given you a robust strategy in less than an hour. What is the meaning of robust? A robust strategy works on any instrument across any time frame. So I don't care if you decide you want to trade lean hogs, or you decide you want to trade gold, or you decide you want to trade, what is it the Europeans trade, CFDs, or if you want to trade Forex, or if you want to trade CME currency futures, the Euro 6E, or if you want to trade Tesla, or you want to trade Amazon, or you want to trade anything, this is going to work as long as we have trend and momentum. If an action repeats, we can trade it. That's our entire mantra. That this is the basis. If you say, what is the common denominator? Is that the action repeats and we have momentum. Momentum traders are likely visual traders. They admire and respect repeating price action. You operate off the ingrained internal mantra, the market is always right and anything can happen. Now, you've got to practice. Mastering any task requires repetition of the same action over and over and over. Like learning to play a musical instrument, learning to tie your shoes. That was a struggle when you first started that. Learning a foreign language. Trading takes considerable time to learn and show consistency. All these people that act like you're going to just trade and immediately have wonderful results, nothing could be further from the truth. Everything takes time in trading, or everybody would do it. So the survival rules for new traders is to keep your trading simple. Block out distractions. Become as mechanical as possible, taking a few setups that prove consistency. Forget about the experts. Your goal is to develop you as your own expert. Develop a simple system. Keep an eye on the fundamentals. Perform your own due diligence. If you hear a trader or analyst is quoted in the media, they probably have an agenda to promote. Not always, but most of the time. So you've got to trust yourself. So for me, simple works best. Support and resistance lines, a moving average, an oscillator, the CCI, trailing stop. That trailing stop I use on that Agina trader. Forget about fancy. Forget about, oh, I got to know what volume's doing. I got to know what this is. Listen, the trading in the 21st century, ever since this 2009 with all the quantitative easing, that entire rally was brought about on low volume. So the game has changed. Just keep your trading simple and then relaxed. I challenge you to do that. Now, yes, my trading style is available as an Agina add-on. Robust for day trading or position trading. It's an excellent learning tool. Signals on the chart from concepts taught in my courses, the trailing stop that I've shown you. You're the trader in command. Now, here's where I'll take questions. I want to thank you for patience while you've listened to me speak. I want to thank Agina Trader for the time and the resources for this webinar. I'm going to tell you again, if you want to hear my writing in the morning, Rooster Call, go to my website, hitthemarktrading.com. And for further study, you can consider the courses that I offer. Now, let me take any questions you might have. I'm going to look in the questions. I don't see any questions in the box. No questions? All right, let me check the chat. In the chat, no questions? Okay, I'm going to ask one more time. Are there any questions whatsoever? Or I must have obviously explained it pretty well. Let's see here. Here's a question. Are the trend line on the CCI also drawn from the add-on? No, that's a great question. No, they're not drawn. That is strictly a you draw those trend lines. Now, what the add-on does, the add-on is taking that into account. Absolutely, but it's also looking at, there's about 16 steps that it goes through. Okay, so what will happen is you'll be drawing the diagonal trend line, and then you'll probably see the signal flash. Is the webinar recorded? Yes, it was recorded. Absolutely. Absolutely. Any other questions? Okay. Could you once again explain how exactly you get a buy or sell signal from your CCI? I will, Martin. That's a great first name you have. Let's just go. I'll just go look at the chart. To the charts. To the charts. Now let me just, I want to remind you something, okay? When I was first exposed to this, day trading, I took an entire year where I would be sitting in front of the computer for the entire trading session, right? After the trading session was over, I printed in black and white the price chart with the CCI. I got my pencil and my ruler, and I drew the lines. Everything you see here, I drew the diagonal lines, I drew the vertical lines to say, okay, where would I have gotten in? Because I am an extreme skeptic, and I must be convinced. And that's what it took to convince me. I mean, repetition, over and over and over and over. So let's go over here. I've got my pen here. And let's just take one at random. Now this is a daily chart. So let's just take one at random. Let's just take this one right here. We're drawing this from the minus 150. Draw it up. And you wonder, well, how do you know where to draw it? you're going to draw it where you can at least hit a portion of that CCI. So what it represents is CCI came down, came back up, and CCI finally broke through the diagonal trend line. Now this is a counter trend trade, right? Because the trend is up. So we break through the line. Here's this, the line is ours, is where, you know, it prints that we broke through. Your protective stop is going to go whoever is higher above the trigger or above the prior bar. And that's it. If you want confirmation, let this be your confirmation. Okay? That guy. When you are trading stock, when you've got momentum working in your favor, you do not expect that price is going to rise. You're saying, okay, we're going down. So the easiest stock trade to do, if you know options that is to say, I don't think it's going any higher. I don't know how low it's going to go, but I don't think it's going to go any higher. So I will sell the calls. I will sell slightly out of the money call. Slightly out of it. And then I want to use a spread. If you're not familiar with options, this seems complex, but it's not. You're going to sell, and then you're going to take a higher strike call, and you're going to buy that for your insurance. You're going to lock in. So if you can collect a credit of at least, say, I don't know, $1.50, that's $150 per contract. If you can collect that kind of credit, that's a good trade. And then you just watch there's two miracles that go on working in your favor. The miracle of price action and the miracle of time erosion. And so, you know, we took a trade recently on USO. It matches the crude business, you know. And heck, the thing went like 92%. Okay? If you know you're working with an instrument that moves, you can get some pretty good returns here using options. I like options because it's less risk and it's greater leverage. How do you like that? Less risk and greater leverage. Let's take another one. All right. I'm starting at least somewhere over the 150 line. So yep, meets the requirement. Draw that line. Okay, here's a touch. And bring it down. So price broke, or CCI broke up here. Here's my buy. Here's my buy. And you know, you see that, well, there's all this congestion here. That's why the signal didn't flash until here and then said, okay, I'm doubly sure, add to the position if you want. So what are we doing here? Some people are going to rush out and they're going to spend $270 a share on this stock. Well, no, not me. Why? When I can buy options. If I think it's going up, I can buy calls, I can sell puts, or if I really have strong conviction, I will sell the puts which says, this is not going, I don't think it's going to go any lower. I sell the puts. I get a credit to my account. I turn around and then I say, hey, I got this money. I'm going to apply that to the purchase of my calls. And guess what? If you're working with trend and momentum in an instrument known to move and you have the signal, boom, it's wonderful. Okay? Now, this is going all the way back to March 2016. So from March 2016, you can see all of these opportunities. Let's look at another one. Let's say that I don't know, you missed out on all this right here. You just missed out on it because anytime the price has fallen hard, the financial media talks about blood in the street, right? So when you finally say, okay, all right, I missed the first diagonal trend line break. That's fine. I'm taking the second one. Well, then here it is. You draw it from here, all right? And you draw it straight down here. There was a little hesitation in the CCI, and then it went up. What do? Number one, you don't know, is this thing going to, what if it falls back lower? You don't know. But if you use options, you are limiting your risk. So you say, you know what, I'll establish my position. I'm going to nibble. I'm going to nibble. First off, I don't think it's going to go lower. So I'll sell some puts. My risk is totally known. Or you say, well, I think it's going to move higher. Gosh, we're coming into one of our favorite seasonal times for trading options, right? If you know anything about seasonality, I'll tell you right now, we're going to be going out 6 months in time, buying calls on equity index futures around Thanksgiving. It worked 5 out of the last 6 years. 5 out of the last 6 or 4 out of the last 5, I can't remember. Seasonality. Listen, there's lots of ways to trade. The problem is the professionals are very, 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 very simple, and the retail traders make everything extremely, overly complex. All right, let's see what else is going here. The calculation of the trailing stop is your secret, right? It's something that, yes, it's what I've spent some time to work with. Absolutely, absolutely. But let me tell you about this Agina trader. They've got it where you can test different things. You can test the Bollinger Bands as your exit point. Now, what are the Bollinger Bands designed to do? The Bollinger Bands are designed to keep price, right? To contain price 95% of the time. So, you know, maybe you want to try that. What are the meanings of the colored CCI histogram? Which color means what? Good question. If it's gray, this gray black line, that means, hey, I'm thinking about an upward bias. That's what he says. Yellow says, all right, this is it. I'm doing it. I've got enough bars now. Be aware. I've got enough bars to have an upward bias that I feel comfortable about. And then all of a sudden he prints these other bars. Well, what has happened since then? He crossed the 150. Well, that kind of called the top. He crossed the 100. Well, if I'm long, I better be out. I can always get back in. Now, this is where he says, I'm not so sure that I want to continue going down or pop right back up. So I will know better after 5 price bars. That's what he says. I will know better after 5 price bars. And then he prints that yellow bar and he says, okay, good to go. I have a yellow, or I have a downward bias. So once again, the gray to black line means he is thinking about creating a bias. The blue means, hey, I got an upward bias working here. The red, hey, I've got this downward bias thing working here. Okay? That's what that means. There will be instruments that you see that this 20 CCI remains above the 100 line for a long period of time, right? That is telling you upward bias is consistent. So you look for a diagonal trendline break and you buy it. You buy. Now look at this diagonal trend line break here. Okay. Somewhere around here, probably that big red bar right there. Now you're saying to yourself, well, why don't I just enter when the 50 crosses, or when the 20 crosses the 150? Why don't I just go short there? I'll tell you why. Because this thing might have just kept going up and up and up and up and up. In other words, remember, the CCI is trying to lead. He will turn, if in a strong market, he's going to turn and price is going to keep on going up. So this is just an early warning for you. It's just an early warning for you. Let me clear this scratch, my chicken scratch drawing. Or you use this trailing stop, hard to beat. Okay, great questions. Any other questions? Anyone have any other questions? Any other questions? Any other questions? No other questions? Good. I guess I was thorough. Let me take the time to thank you again. What? Is your trailing stop a special one? Well, it's something that, yeah, it's something that I've been working on and that I use, and I guess, yeah, it's something that it's something that I've used and shared, and I've allowed Agina Trader to put it in the program. Okay, absolutely. Look it up if you've got the Agina Trader, the Rhymes trailing stop. Okay. What does IBB 1D? Okay. What this means is this is the daily chart of the IBB. IBB is the biotechnology shares. It's an ETF. Okay. And it just says it's a daily chart. This ES 1 day direct inverted, that nothing to do with this chart. I was looking at something with the technician from Agina Trader yesterday. They were asking me to beta test something new, which I will present next Tuesday, November 8th. And I was just testing with that. That's all that is. Let's see what else. Jan, check the exits on the Agina Trader, okay? Okay, let's see. What are the meanings of this color? Oh, we went through that. What are the mean? Okay, I went through that. Let me. Thanks. Where can I see the recording again? Eugene, they're going to post this, and I think they'll give a link out to everybody who attended. Okay, please explain that your trailing stop is dynamic and not hard. That's a good point, Arthur. Thank you. What he means by that is, by dynamic, it's moving. Okay? It's moving. So imagine, if you will, you're in the trade, you got in, and you're happy because the trade's going your way, and then all of a sudden you see a little bit of a pullback and you start getting a little concerned, right? So it pulls back a little bit, and immediately this trailing stop senses it and says, I better be careful here because we want to preserve as much as we possibly can. And the trailing stop immediately says, shh, I'm running up here. If it looks like trouble, this looks like trouble, I sense it, and then once the trouble passes, the trailing stop relaxes a little bit, says, well, that was close, and then price moves on, and the trailing stop says, hey, I'm here, I'm here, I'm here, and then all of a sudden, boom, okay. This is where it knocks it out. So yeah, the trailing stop is moving. It's dynamic. It's moving. It's not anything fixed. It is absolutely dynamic and moving. Great questions. Great questions. All right. I sure have enjoyed talking with you today. I appreciate your attention. Thanks, Art. Appreciate everyone being here. I love talking to traders. I love talking to traders. And I'll be talking again. Now, the next one I'm doing next Tuesday is, it's more to teach you cunning into the market, okay? A little bit about correlations and linkages you should be aware of, okay? Not one of those things that is going to immediately pay off or anything like that, but you need to know. If a certain instrument does one thing, we can extrapolate that a totally unrelated instrument will react in an accommodating or a negative manner. So this is what I'm sharing next week. This is all experienced trading. Would April 10 be an entry short and be stopped out by the red trailing stop around the 20th? I mean, look at that. April 10. April 10 is here. Okay. Here is a short. Okay. All right. The thing is that it is a short because of my CCI, but not according to the program. See, that's the difference. The program said, hey, I'm long here. So the trailing stop is working according to the program. So the trailing on this entry, it was not stopped out. If someone were to say, okay, I'm going to go short on this CCI, yeah, if they took this, got ready to enter that order the very next day, and let's say they entered it, they could have put the order as a contingency order and went to work, and then they found out that, okay, the order filled, but the market moved against them. That would be a loss. Absolutely. But if the person got in here, was long, then we touched but did not go below, so that the trader is not stopped out until here. So what will happen is it will stop you out on a close below the trailing stop, not if it just simply touches it. But you can fine-tune that, Agina trader, if you want it. You want to be conservative, you want it where if it touches you, takes you out, no problem, they'll do that. Okay. The trend line on CCI is not drawn on the add-on. No, it is not. You're welcome, Mark. It is not. It is not. Any of you guys ever travel Southwest Florida? That's where I'm located. If you come to the U.S., look me up. All right, I'm going to let you go, and I appreciate everyone being here. Thank you very much. Martin, I'm glad you enjoyed the webinar. Thank you. Will the trend lines ever be added? I don't know, Art. That's something where I'll have to discuss that with Agina and just see if that's a possibility. Well, I'm glad you appreciate the presentation. You're most welcome. Appreciate you being here. Thank you for that. You might come for Thanksgiving. All right. I look forward to having a coffee with you. Okay, Thomas, I appreciate you being here. I'll talk to you later. Bye-bye now.